Hi everyone, welcome to this new series called Edyst Explains, where we take some latest happening in tech and try to explain it to you, hopefully to improve your awareness, which can help you out whether you're going for interviews or just generally interacting with other people. Today, I want to talk to you about the most recent cryptocurrency crash. Yes, I know there have been a lot of cryptocurrency crashes. Which one am I talking about? So I'm talking about FTX and how that crash has actually affected a lot of people, and we'll discuss about what are all the different things that happened, how you can make some sense out of it, especially as beginners, what this kind of crypto crash means, and how to actually make sense of it, and how you can probably save yourself from such crashes in the future. All right, let's get started. So the story starts with this person called as Sam Bankman-Fried. I hope I'm pronouncing the name right. And this person started this trading company called Alameda Research, which basically would just try to make better trades and just make money off of trading cryptocurrency. Basically, you must know a lot of people who made money from that, so he was just another person who was trying to do that, but he was doing a good job at it. Alameda Research was making a decent amount of money, but they wanted to do more. So what they ended up doing was they launched an exchange. So what's an exchange? So you might have heard of something like Nifty or Sensex, where you can actually exchange stocks, right? So there are also exchanges for cryptocurrency where you can basically buy some Bitcoin, trade that for some Ethereum, trade that for something else. That all is possible using exchanges. Now there are a lot of exchanges. Sam Bankman-Fried or SBF started this thing called as FTX. That's the name of the exchange that they started. Now it's not something unique. A lot of people had put out exchanges. He was just another one person who started exchanges. But what he did was he launched this thing called as the FTT, which is kind of like the FTX token. What is this FTT all about? See, if you wanted to actually exchange or participate in exchanging stuff on FTX, you needed to have an FTT or FT token. Now you might be getting a little bit confused here. Don't worry. Think of it like this. Let's say you go to your college mess or college canteen. You could directly pay and buy your noodles or rice or whatever you have over there. But in many canteens, they have this token system where you actually go ahead and get a token, and with that token you go ahead and then purchase your biryani or noodles or whatever you want to have. So you go ahead and buy, let's say, 10 rupees worth, and then you can exchange that for any 10 rupees worth dish that is there. Think of the FTT like that if you wanted to trade on the FTX exchange, you needed to have that token, and with that token you can take an equivalent amount of any cryptocurrency out there. I hope you guys get the idea. So now this in itself is not really a problem, but the problem came when something fishy started to happen with FTT. See, FTT itself is a token, so you can kind of think of it like another cryptocurrency, but this in itself has no value as such, because the only purpose it serves is to exchange it for other currencies. Now I know a lot of you might say, but isn't that really what all cryptocurrencies do? Let's forget that for now. Let's just focus on this part, which is FTT's main purpose was to exchange for other cryptocurrencies. Alright, well and good. What SBF or Sam Bankman-Fried did was that he took this FTT token, and you remember his earlier company called Alameda Research, they bought a bunch of these different tokens as well. So now all of a sudden the value of FTT starts going up, and even though this particular token doesn't really have any other use other than being exchanged for other cryptocurrency, its value suddenly starts going up. And since its value starts going up, it starts getting valued more and more. Now based on this, he was able to take, because he had such a valuable asset in FTT, he was able to take more money from other investors. Also, if you look at Alameda Research, which was his previous company, they bought a lot of these tokens, the FTT tokens, because again they're becoming a valuable asset. So he starts buying the Alameda Research, which is his previous company, starts buying some of these new tokens from FTT. All is well and good until about early 2022, where a huge crypto crash happens. Bitcoin falls tremendously, Ethereum falls tremendously. There is no cryptocurrency that was not affected. Every cryptocurrency was affected. All of these things start falling tremendously, and FTT and FTX was no difference. Remember that Alameda Research, the other company, main job was to make money off of cryptocurrency. All right. Now, when they were trading with by using FTT and other tokens, they also made a lot of losses on the cryptocurrency trading because the entire market fell. The more interesting part of this is in the exchange, where where other customers were there and they were exchanging cryptocurrencies, many people had deposited money in the form of FTTs, and you should ideally have been able to withdraw money from the exchange. Because I just put the money there, let's say for example, I put 10 rupees there to be able to trade it in Bitcoin or Ethereum or whatever. Now I put that there in the hope that I'll be able to exchange with something else. Maybe I'm not doing it today, but probably I'll do it tomorrow. What Sam and Alameda Research etc. did is they took this money of mine and they started making trades on my behalf without even telling me. Right now, footnote, I didn't really lose any money in FTX or whatever, but I'm just telling you as an example. So now, just recapping the entire thing, Alameda Research was there, FTX launched this thing called FT tokens, and the value of that started increasing. And since the value of that started increasing, Alameda Research also bought some, and it further increased the value. Investors again put money in that, and Alameda Research was making a lot of cryptocurrency trades. In 2022, early 2022, cryptocurrency market fell down, causing losses not only to the entire market but also to Alameda Research. And Alameda Research had not only taken money from just these FTT tokens, but they'd taken money off the people who had put money in FTX, the original exchange. So now, let's say I had put the 10 rupees, I can no longer withdraw the 10 rupees because that money has been taken to cover losses of somebody else, right? Now what happens is, somebody comes to know of this thing, and there is a publication called CoinDesk. Again, if you're into blockchain, you should definitely know about CoinDesk. So CoinDesk comes to know about this thing, and not specifically the entire scenario, it just comes to know that Alameda Research has a lot of FTTs, like a lot of their assets are in the form of these tokens. It's like, for example, you go to a rich person and you say that, oh, okay, can you show me your assets? And they'll probably say that they have a huge house, they have a huge, a lot of land, a lot of gold and so on. But if you went to Alameda Research and ask them what are the kind of assets you have, they would mostly tell you that, oh, we have a lot of these tokens, these FTT tokens. And again, as I said, think of them as your canteen tokens. Imagine somebody saying, I'm really rich because I have a lot of these canteen tokens. Nobody really values those canteen tokens other than your canteen. Similarly, the FTT weren't really valuable as much. So when people came to know that Alameda Research's major assets are based on these tokens, it kind of caused a panic. Now there's another side story going on here with another exchange, but I'll just cut the story short. So when people came to know that Alameda Research has these many FT tokens, they said something's wrong here, and they started trying to sell the FT tokens because they said, if something goes wrong here, our money will go. Now the problem is everybody panicked and everybody started wanting to withdraw their money and exchange their FT tokens for other things. Or just for normal money, right? They wanted to just get their money back and exchange the FT tokens back. What happens when everybody tries to sell the same thing? The value of it drops, and when the value of it drops, everybody's at a loss. That's one. But the other thing is, FTX should actually have the original exchange should actually have enough money to give you back. Remember, they took your money and they covered it for the losses of Alameda Research, so they don't actually have any more money left. This is what they call as a liquidity issue, or rather, I don't have enough money to give out, is what they're kind of saying. A lot of things transpired after this. A lot of things happened. Another competitor tried to buy them out. That's the other exchange I was talking about. I'll spare you all the details. Bottom line is, this company FTX and its founder was supposed to be one of the most respectable person in crypto domain, and was supposed to be one of the shining lights of how credible somebody can be. But after this crash, this entire company went bankrupt. All of the people lost a lot of money. Estimated losses are anywhere between $9 to $50 billion. It's a huge loss, and this is nothing short of fraud. This is actually fraud has happened, and this person and the entire team are actually fraudsters. Now remains to be seen how many people were directly involved in it. Can we blame everybody or not? That's beside the point. Let's focus right now on what this means for you. Number one, if you're in blockchain, you should, or you're an aspiring blockchain developer, you should definitely know about this crash and many of the other crashes that have happened earlier, just to know what is happening in the blockchain domain. Because anytime you speak to an interviewer or anybody in the domain, they will ask you about this, or they will at least want to discuss about this. Number two, if you are an active trader, the best safety advice everybody gives is, you should have the tokens in your own wallet, and you should not have the tokens on any exchange. Even if you exchange some money for a token, get that token into your wallet. Don't keep that token stored with that exchange. As a famous saying in crypto goes, not your keys, not your coins, right? So basically, if you're not your keys, meaning if you don't have the key to your own wallet, or either only you should have the key to that wallet, then and only then is that coin under your control. In all other cases, if the key is shared with somebody else, you never know what can happen, and this is exactly what happened. These people's coins were taken away and given to someone else, or covered some other losses. So I hope I've been able to explain what FTX and the crash was all about. For more details, please check out a lot of different videos made by other people, as well as a lot of news articles that are out there. Do check them out. Let us know in the comments below if you want me to cover any other kind of topics related to crypto or any other technology. We'd be happy to cover it. And let us know if you're liking these explainer videos. Subscribe to this channel. It tells us that you're also liking them. And don't forget to share it with your friends. Thanks a lot. Eagerly looking for suggestions from your side, and I'll see you next time. Thank you so much.